Welcome, everybody, to another episode of Amplify Your Business. Today, I am talking to Jonathan Fishbeck. He is the CEO and founder of EstateSpace. Welcome to the show, Jonathan.
Awesome, Lance. Thank you for having me here today. Happy to be here.
Yeah, I'm really excited to dig into your business because you are helping people basically retain a lot of the wealth that they've accumulated. And our audience is really, really keen to know that, I'm sure. But before we do that, can we talk a little bit about what you think three things are that every entrepreneur needs to know?
Yeah, for sure. So I think that's a great question. There's three things that always come top of mind to me in this order. So the first thing is making sure that you get a good advisor. It's very important in any marketplace that you find somebody that has the experience, that has done what you are trying to do. And these rules also see no boundaries, right? It doesn't matter what business you're trying to start in what industry. The second thing is to find like people. So in my case, I have found a network of founder and CEOs of SaaS companies. So I've surrounded myself with like entrepreneurs because it's very important for my continuous education. I learn more from my peers. I pick up and actually apply more things to my business by learning from others that are doing the same thing I'm doing. And then the third thing is prepare and plan. So it doesn't cost any money to think. So I've been a firm believer over the last couple 20 years now that 70% of everything I do is preparation and planning. The execution of a really good plan is easy. Trying to execute no plan or a poorly put together plan it can be very difficult and be very costly. So those would be my top three things, Lance.
Yeah, exactly right. As they say, failing to plan is planning to fail. And so that's always a really good lesson. And obviously, something that every successful entrepreneur out there has lived through those moments of really poor planning and the consequences of that. And maybe we'll get into some stories about that a little bit later. But I do want to dig into the advisor comment that you made. So get a good advisor. Are you talking about paid advisors? Are you talking about unpaid, advisors and mentors? How is it that you, I guess, approach that from your perspective and your experience?
Yeah, well, I think that from like a mentorship perspective, there's a lot of people out there that are willing to do that for free. I'm one of those people because by mentoring others and teaching, I learn more teaching than I do kind of just trying to learn. So I'm a firm believer in giving back. A lot of other entrepreneurs also have this shared mindset. But no, from an advisor perspective, I've gotten the most value out of a paid advisor service when you find the right one. So once you find the right one, ultimately you're going to partner with them. You're going to pay them to partner with your business, and they're going to be the best financial investment that you're going to make in that company, right? Assuming that they're the right person for your business, because they're going to help save you all of the time and effort because they've been there and done that. So while they may cost a lot, ultimately they cost the least because they're going to help accelerate the things that you're trying to do. A lot of advisors will spend the time and again meet with it. It's a bi-directional interview. You got to make sure that both parties are right for each other. But once go through the due diligence of really making sure, because it ends up being a commitment. But it can also look like things if you don't have capital. There's other tactics that you can take. You could give part ownership. You could give them a board position once your board is formed. There's other ways to compensate them. But yeah, I mean, when they have a vested interest, you're going to get more out of an advisor.
Yeah, yeah, and that's one of the things that I've heard a lot of people say who have used both, a free advisory board and then a paid advisory board, and they've really stressed the difference in terms of the paid ones. They are, the advisors themselves are much more accountable to the process and to the results of the organization, and so you end up getting maybe a little bit better tutelage through that process. I'm curious. Now, you are a three-time founder, and so this isn't the first, rodeo, so to speak, that you've been on. And was this something that you identified like in your first venture? that you started out with with a really good advisory, network there, or is this something that you learned through some of the ventures that you've had?
Yeah, so this being my third venture right now. It was June of 2019 when we pivoted this company to a pure SaaS, and it was at that time that I found my first real advisor.
Yeah.
So my previous ventures, I come from a family of entrepreneurs. So I had, my father was a mentor to me, still is a mentor to me. And so those were that he was kind of my guidance in the beginning. My first two ventures were service-based businesses. So I come from ultra high net worth construction management, and it was during those times that I had the opportunity to really identify, and it was a genesis for this venture, and getting back into technology, and back to kind of the education that I had gotten prior to getting into construction.
Yeah. So, well, now let's talk a little bit about your business right now. So, Estate Space, what problems are you trying to solve with this particular venture then?
Really hard ones. When it comes to, when estate space is at a high level, we're simplifying estate management. When you dig a little bit deeper into that, we start dealing with non-financial asset management, both from an operational perspective and a portfolio perspective. So, and they work hand in glove, right? We have this virtuous cycle between our clients and the improvement of their economic outcomes. And so when we start to look at property management, asset management, now we're talking about things like cars and art and collectibles. We understand that business very well, having come out of service and managing facilities at a very large scale.
Yep.
So, that's a very hard thing to do. That's a very complex operation. There's a lot of privacy issues that you're dealing with, a lot of moving parts in a very big ecosystem. And so when we started to look at technology in that space, let's call it 7 years ago, we started to realize that there's all this fintech out there, right? There's all this prop tech, but there is nothing that's really managing this, right? Everything had to deal with financial or liquid assets, alternative investments, right? There's a lot of financial fintech out there for property investors, but nothing to actually get back to, okay, I have to manage a very complex estate. Some of the personal reasons why we did this was, being on the other side, inside of these homes, we've seen a lot of problems, right? So we have this, huge marketplace where you've got, staff members that, are unable to properly manage expectations and breakdowns in communication and a lack of transparency of information because everything's so private. And so trying to solve those things, and then there's no standardization of information. So how do we do that in a dynamic way that's scalable? So those were some of the initial problems that we really identified, and are excited to be able to have now solved for our clients.
Now, in terms of the opportunity, so you went from service-based businesses into now a SaaS product. I'd imagine what was really attractive about that was just the scalability of the SaaS model, and that recurring revenue stream that can be, achieved through it. Is that fair to say, or where did you see the real opportunities to take that pivot?
Yeah, so maybe similar to yourself, right? I was building homes. I had clients. I love relationships. I'm a people person. I wanted to be able to help more people, and I could only help so many through a services-based business where I've got, anywhere from, 1 to 5 clients at a time. And so the real personal professional opportunity that I saw in SaaS was, yes, those things are fair to say. Recurring revenue is great. I love the subscription model. I love now being able to work back with service providers that I worked with over the last couple of decades to help them, strategize and create service as a service, right? I think from knowing this now I'm able to help. I mean, we're just crossing 100 clients and 1,000 members. What I really love about this is that we have of those clients, I have a relationship with almost all of them. Someone in our company has a relationship. So I think that some of the things that really separate us and kind of give us that advantage is that, while I might have a technology background, I came out of service, right? I'm not just a technologist trying to solve a problem. And the other piece of it is the human capital part of it, right? Knowing that we had clients that they needed this thing in which we were going to build, which was EstateSpace, and really serving them and supporting them as people. Our technology wouldn't be anything, right? It's useless without people, and so that is something that we still have a very profound respect for, managing relationships and having a marketplace of service providers that can help people when they need help in a given aspect or area of their life.
Yeah, and I teased at the very beginning when I did the introduction that we're going to be talking about, or that your business is in the business of kind of helping people retain some of that net worth that they've worked so hard to achieve. And so, are your clients then, are they the actual owners of all the properties and collectibles and so on, the non-liquid assets? Or are they the service providers who are then looking for a solution to help manage their clients who are those people?
So it's both.
Okay.
We're serving the principal owners. We're serving their representatives. We're serving family offices. We're serving property and construction management firms, service-based companies that are helping. And so we created a platform from like a permissioning and a security perspective to work from a B2C or to work from a B2B, or to be able to create two separate connections and allow them to do business together, and having the right levels of transparency when we start talking about like property or project or organizational management.
Okay, understood. Now,
Yeah.
when it comes to your experience through the journey of developing this business, I mean, you're on the service side of things before. Your background is, I think you said, construction. And so you understand those aspects. Building the technology pieces is something altogether different. I mean, obviously you saw an opportunity and a need. So how do you yourself navigate through that? Because it's a totally different world with a whole different language altogether, literally, when we're talking about, programming and building a SaaS company. So how did you approach that?
Yes. So I'm smiling, right? Because, rewind 2015, 2016, right? Most of the 2010s, we're a $4 to $15 million, annual revenue construction firm doing really well. Well, so that's just going to translate into technology. Like I'm going to be successful there, right? So that that didn't really happen, right? It took me probably about 2.5 to 3 years to really like reinvent myself, really get back into technology, really learn and understand modern tech. I haven't written a line of code since college, so
Yeah.
it'd been a while. But one of the cool parts is, and something that I always when talking with others, it's so important to understand kind of those tangible assets that you pick up along your way in your career, right? So like very complex management in construction and projects, like that translates to operating a business, right? Being able to see things in a simple way, and then really being able to apply the things that you've learned over time. And I think that the kind of the key for me was getting a good advisor. And as of this year, I actually also hired a coach.
Mhm.
I just wanted to get new perspective. I really wanted to work on myself. I really wanted to focus on kind of softening myself, doing a better job on me, and my personal improvements have actually been the biggest impacts professionally, where I've really been able to become a better CEO, become just a better coworker, right, better colleague, better advisor to others, and a better partner. So that's I think for me that was kind of, it took me a while, and so but I'm glad I did it, because now I'm ready. EstateSpace is scaling in 2023. We've got a lot of traction. It's very, very exciting. But now I'm ready for that excitement. I'm able to really slow down to speed up. I'm really able to do my job well as our CEO and product owner. And that I spent the last probably 2 years. The way that I got there was really just entrenching myself in the development of the product and learning everything that I could from our team, which is now about 15 people. I think 12 of which are developers. So we're I've got really great leadership, and I've got the right knowledge base to be able to be an effective product owner, and be able to properly kind of delegate and manage a tech business.
Yeah, yeah, really cool. So now, obviously, this is a totally different kind of business than what your first two businesses were. But I'm curious, what maybe is easier this round, with this founding of this business that was maybe more difficult before, right? Well, so what's gotten easier as you've gotten more experience as a founder, as an entrepreneur, as a business owner?
Everything.
Everything.
SaaS is great, right? We've got a tiered subscription model. I'm not dealing with a lot of the same complex accounting issues or chart of accounts. Everything's just simpler with SaaS. And
Mhm.
simple is hard to get to. So even if you are SaaS, I mean, there is complex SaaS businesses out there. So really trying to figure out, okay, what's the simplest point that we can get to? What are the three things that we're going to do? Who are we, right? And then really just staying on that aim and not wavering from it, because I'd say the other things that kind of tripped me up in the beginning is I was so service oriented. So kind of my competitive advantages were also a weakness in the beginning, because it was hard for me to break that service mindset. And I've talked to others
Yep.
about that, and that's a real thing. So, again, if I would have maybe planned a little bit more and slowed down in the beginning, I might have overcome some of that stuff. But again, it's all part of my ride and my journey, so I own it, and it's been a great learning experience.
So now, as an entrepreneur myself, I mean, I can relate to the ups and downs of the journey, very much so. But there's also a lot of things that that we love, but some things that the entrepreneurial lifestyle makes things a little bit more difficult too, right? So,
Yeah.
in your opinion, what's the most difficult aspects of being an entrepreneur?
I'd say work-life balance has probably been my number one struggle.
Is that a thing? Is is there such a thing?
Yeah, well, so there is. I've actually just realized it last April when I took a family vacation and didn't work for the first time in 40 years. So,
Yeah.
I think with SaaS, one of the things I really love is like, my business. I might have an employee profile somewhere between 20 and 30 when I'm done. Being in services, you need people to scale revenue. So, I was managing, 50 plus employees, 1,200 team members around the world to complete to get work completed. So it really simplified that. And now that we're to a good point, we've, like the grind, if you will, feels like it's kind of in my rear view mirror. I'm looking forward to new challenges, but I've really done a good job. And I would encourage anybody to properly time block, right? I preach that first you need to take care of yourself, Lance. Then you take care of your family. Then you go to work and do a good job. If
Yeah.
those, you can't take care of someone else if you can't take care of yourself. And so, just maintaining good health, keeping truly partnering with my wife and being there first, and then going to work. I think that for me, that second piece of like I finally partnered with V, my wife. I've had a much better business because of that. It was very much separate, mostly because she didn't really want to know about what I did at work, and she was a great outlet for me to get away from it. But
Yeah.
to really, really be successful, you have to partner with your wife in every aspect of your life. So I've now brought her into that, and she's actually one of my best advisors. Right, she's got a really smart woman and gives me a lot of great insights and advice on what to do and how to handle things. And that's been awesome.
Yeah, yeah, it sounds beautiful, and definitely a dream I think that a lot of entrepreneurs have in terms of having that the team, right? Your team at home, your team in the business, you're just taking on the world and all the challenges that come with it
Yep,
together, right? So it makes everything
exactly,
stronger potentially. Yeah.
exactly right.
Uh, so are you bootstrapping this business, or is this something where you have outside investment? Are you anything like that?
Yeah, so we bootstrapped for the first about 4.5 years. Really, we did friends and family funding up until August of 2022, and so we're doing a pre-seed round right now. So we're raising 3.2 million on a $17 million pre-money. We've raised 2.2 of that, so we have a million left, which is a really positive sign considering the macroeconomics that are happening around the world.
Yeah.
And we have a lot of interest, and so we're actually we're open to actually raising an additional $2 million because of investor interest at this point. So that's really exciting for us. That latter piece would actually take us to positive cash flow sometime about 16 to 18 months from now. So we're really excited for what the future holds here.
Yeah, well, and just to have that affirmation as well, right, from other people saying, "Yeah, this seems like this is a good idea. You're on the right track. I want to support this." That's cool.
I can't tell you how rewarding that is. It's been, I mean, as a founder, but to have
Yep.
people, I never really thought I'd be here where I'm raising capital for a business and I'm scaling a tech company. Like I never didn't see this one kind of coming, but definitely excited for the fact that other people are excited. I think one of the best things for us right now is, well, I don't get on a lot of client calls, but when I'm on there and I'm seeing somebody using what we've built, the way that, solving the problem that I lived, and then
Yeah.
being able to help a family, or someone saying, I've been waiting for this for, so long, like that's really, really rewarding.
Yeah, that's why we do it, right?
Yeah.
Yeah, yeah, completely. So I'm curious if you could write your younger entrepreneurial self a letter, what would be in that letter?
Your opening question would be the letter to myself.
Yeah,
I would have wrote myself a letter to go get good advice, find
yeah,
like-minded individuals, and really plan and prepare before launching a business. I think from when would I have done that? I would have done that on my first venture.
yeah.
Um, I was very excited. I'm a type A person, right? I was very excited to like start a company and have this thing and go do great work and help people. And so I would say that with each venture, I've been able to rush less. I've been able to plan more. I've been able to better be prepared. And so right now, I'd say that, and the other thing I would probably add to that letter is start with really good corporate hygiene, right? Like really
Mm,
do a good job of the formation piece of it. Um, and then put in proper governance, right? Really be focused as a CEO on corporate governance. It's our job in most cases to raise capital or to make sales, to govern your business properly. Investors appreciate it, but most importantly, you will appreciate it. Those are the types of things when you have good hygiene, that will allow you a work-life balance, right? That will because my spot, we share in the successes and the struggles that we've had over the years, and I think that's again, super happy that I've kind of went through all of this stuff, because I have a profound appreciation for kind of the position that we finally got in the company to. 2019 we pivoted. We were invested with millions, and we probably had about a $0 value. So we've
mm.
continued to just work and grind and build the company back to a valuable asset that now is an investable asset. So focusing on that corporate hygiene and governance is going to allow you to accelerate that roadmap.
Yeah, great advice. Really great advice. Well, thank you so much for sharing that and sharing your story. It's been really interesting. And I think one of the things that, us as entrepreneurs are always looking for is some of those little nuggets of knowledge and little pieces that one can walk away with. And I just really loved your statement there where you said, if you're slowing down to speed up, right? And it's just being back to that planning and being methodical about everything and making sure that you have that groundwork laid for success.
Like Nike
I don't know
just
if there's anything else that you want to add to that statement, but I think that's kind of what you were getting at, right?
Yeah, and so I kind of took the Nike "just do it," and it's our
Mhm.
motto is "don't rush it."
Yeah. Yeah.
Yeah,
Which is the opposite of, like Google's, I think it was their old, and I don't think it still is, but or no, which one was it? It was hurry up and break things or something like that, break things fast or something.
yeah,
One of those big tech companies anyway was that way, right? And it's like you're taking the exact opposite approach, which is I think a little bit wiser.
yeah.
Yeah, very cool. So, Jonathan, how would people, reach out to you if they wanted to connect with you personally or to learn more about Estate Space?
Yep. No, thank you. So you can just go to estatespace.com. You can contact us through our website. You can find me on LinkedIn. I'm always looking to connect and grow our network, my own personal network. Um, and then, from there, people that connect with me, I'm always looking to have a meaningful, thoughtful conversation. So, please don't hesitate to get to know me. And I'm always looking forward to getting to know others.
Excellent. Well, thank you again. Really appreciate you taking the time today, Jonathan. And for those of you who are listening today, if you really enjoyed this episode, you want to check out the videos, head over to amplifyyourbusiness.ca. That's where you're going to find the full archive. And if you prefer to just listen to the archives, you can head over to any of your favorite podcasting platforms and just search Amplify Your Business, and you're going to find us there. So until our next episode, have a prosperous day, everybody. And thank you once again, Jonathan.